Welcome everyone for yet another super interesting session, and we are going to Ayush. You can take it forward.
Yeah. Raghav, are you ready?
Yeah. So
Let's
hi
start.
everyone from the community. On behalf of NMIMS interns, me and Ayush here will present our research and analysis that we did under Suyog sir on Imagica and how it is a turnaround story and how it can, it is looking forward towards growth. So moving on to the industry figures. So the amusement park industry in the country currently is of 11,500 crores as a market size of turnover. It's growing at a 10.5% CAGR currently for a couple of years, but the bigger industry players are expected to grow by 15% expected CAGR. And these are the numbers that are published by two major bodies. First is PwC, and the second is IIPI, which is Indian Association of Amusement Park and Industry, which is a body containing of all the big players in the amusement park industry, which are, for example, Wonderla, Imagicaa, SL World, and all of these players do have an role to play in this organization. So the market is expected to go to 25,000 crores by 2030, which is its expected growth. So what are the key growth drivers from an per income perspective? I will cover it forward to the Magica growth drivers, but for a industry perspective, the demographic shift, that is, the industry experts believe that the India population growth percentage has peaked, and it will settle around 35 to 50 in the upcoming years. And these are the people that generally bring around their kids to for a family get together or family picnic to amusement parks. So this is a good driver. Again, the reduction of COVID impact. During COVID years, we saw that there was a stigma against going to swimming parks and amusement parks, and we saw that these markets went down significantly. But now this stigma is vanishing away, and people are gaining their confidence back in this industry. And second, which is a very interesting point, is the devotional parks market growth. Either we say it because of the incumbent government support or the religious sentiment growing in the country. We can see that the devotional parks market is a very growth oriented market that is seen by all people currently, and we'll see that Imagica also has a player in this market now. So if I have to tell about the company timeline, uh, the February 2010 was when Manmohan Shetty sold his majority stake in Adlab Films, which was the company earlier, and renamed it to Adlabs Entertainment Private Limited. And then April 2010 was where the thoughts of the park and set up, and it was set up that the parks of a such a setting would be set up, and the project was called by a mega project by the government. During the period of March to December 2012 is where the loan taking process of the financial perspective of the park started, and also in November 2013 was when the park actually commenced its operations. So it was Magica and Aqua Magica. Imagica was the theme park, which started in November 2013, and Aqua Magica was the water park, which started subsequently in October 2014. In March 2015, the Adlabs Entertainment IPO. Okay, so I'll continue. Adlabs Entertainment IPO started bidding on. It got listed on April 6, 2015. So around after this period, the company actually had taken a lot of loans, and the financials of the company were in a hassle, and the company's revenue was not making up for the financial losses the loans it had taken. So it was the value of the company as well as the stock value had gone very low, and the promoter was also in talks of selling the business. The other reason of promoter sentiment for this was the fact that Adlabs Entertainment wasn't only in the um, uh, amusement park industry; it was also in a theater industry. And the Manmohan Shetty, which was a promoter back then, was majorly interested in the theater industry, and he spent much of his time surrounding that industry. So 2020 was when the company's name changed from Adlabs Entertainment to Imagica World, and 2022 is, I think, where the turnaround will say officially starts when the Malpanigroup, which is the new promoter, enters the conversation.
In fact, why we got interested in this company? First of all, I would like everyone to be on mute, otherwise it becomes very difficult. Let me just mute everyone. Raghav, you and Ayush, you can unmute yourself later. I'll unmute you. Ayush, I unmuted you, and Raghav. Yeah. So why we've got interested in this company is because it is a special situation. And we discussed about this. I shared the blog of special situation with these interns. And wherever there is a change in the promoter, we have seen that with CG Power, we have seen that with Cupid Limited, when the promoter change happens, it brings a lot of energy. And I believe that same level of energy has been brought by Mr. Malpani. This Malpani group is having lot of experience in this industry. Please go ahead. Ayush, Raghav.
Yes, sir. Raghav is.
So again about Malpani Group is a business group that has a very diversified portfolio and has a 60 plus years of experience currently working in India. So it has its portfolio contains renewable energy, FMCG, real estate, hotels, and primarily the thing to look at is amusement and water parks. The Malpani Group already was operating water parks by the name of wetandjoy, so and a devotional park in Shirdi. So they were having a significant experience and exposure of the industry or how this works, and these were profitable parks. So that gave them an edge, and they actually is the reason why they could prove, and they are providing significant numbers to the company now. Moving on. So promoter holding, when Malpani Group acquired a 66.25% stake in the Imagicaa through allotment of equity shares. During that time, a theme park limited company, which was earlier a promoter, got changed to retail holdings in that period. So we saw we can see 72.66% to 65.95% drop in the promoter holdings. But Malpani Group showed the confidence in their business and their growth vision, and they gained their stake back to 70.86%. So the board members contain of Rajesh Malpani, Mr. Manish Malpani, and Jay Malpani, which is the MD and CEO of currently Imagicaa. So what was the debt resolution strategy? As I discussed earlier, that Imagicaa had a very mounting debt, and that was one of the major reasons regarding the downfall of the company. But what was the debt resolution strategy? So Malpani Group acquired their stake through a 450 crore rupees equity share allotment. So firstly, the debt resolution strategy is twofold. First, the debt was around of 575 crores. The 500 crore debt was resolved through the money that came from the allotment of equity shares, and the other 75 crore was converted into equity share, giving them an 11.97% share in Imagicaa. So by the time of 2023, the company, which was debt ridden, actually got debt free. So what were the turnaround reasons? So managing finance costs, Malpani Group, the first thing that they did when they came to the table was to actually resolve the finances of the company, to look what is the debt, how they're going to resolve it, and actually take the company debt free. And then leveraging expertise. As we said that the Malpani Group actually knew how the industry would work and how the industry, what you need to do to survive in this industry, amusement parks. So their leadership and their expertise actually lead to more cost savings and potential larger customer base. So again, focus on growth. The Malpani Group, unlike the older promoters, shows that they are here for the long term. They are going to take the companies forward through various acquisitions that they have done, through the Surat Park, through combining all their current parks in the same portfolio, shows the fact that they're actually looking forward to take the company to a new level. So these were the turnaround reasons.
Oh, sir, I'm on mute. Okay. Oh, so now let's get into the management plan and the future outlook for the company. So so the company focuses on mainly three strategies. Firstly is focusing on urban clusters. So company plans to expand in the tier one and tier two cities of India through inorganic growth and rapid expansion, which is taking advantage of the growing consumer base. Secondly, is expanding its catchment areas. So catchment areas refers to the areas through which a park can get its customers from. So company is planning to increase the footfall of the already existing parks and the upcoming parks by working on this through providing traveling facilities and also providing discounts for specific areas from where people come from. Thirdly is building parks near easily accessible areas like near to national highways or major train stations, which also assist in strategy too. So now coming to the acquisitions part, the company is undertaking acquisitions of 4 parks of the Malpani Group only, which we can say is just a transfer of parks from the Malpani Group to Imagicaa. These parks include wetandjoy Theme Park, wetandjoy Water Park in Lonavala, wetandjoy Park in Shirdi, and also a devotional park in Shirdi. And all these 4 parks are currently operational and are going to be acquired for a total of 630 crores, which will be payable in tranches, which we'll discuss later. Apart from this, there is also an acquisition of the water park in Indore, which is not currently operational and will be and and is not going to be operational for 2 to 3 months. The total cost of acquiring of this park is going to be 140 crores. The catch in this acquisition is that the company is not acquiring the land under the park and will have to pay a rent of rupees 3.8 crores every year. And also the company has specified that 10% of the cost of acquisition of this parks, 630 crores plus 140 crores, is going to go into the marketing of these parks. Now coming to the synergies part, the management has identified some of the cost and revenue synergies which the company will gain from this acquisition. Firstly, the overhead cost. The overhead cost is going to be reduced by 10 to 15% due to a common management team. All the parks will now get managed through a single headquarter and thus will lead to savings. Secondly, is that there are going to be since the company now has multiple number of parks and is going to be the market leader, the company gains a negotiation advantage on its suppliers. Thirdly, is the reduced transaction fee because of a common system and gateway. However, the company didn't identify a specific percentage of this, but there is going to be savings in terms of this also. From the revenue point of view, of course, there are going to be cross-selling benefits for the park like super passes, F&B and stuff. But the company didn't give a specific percentage for this, but there are going to be synergies in the form of revenue also. Now, let us get to the reasons why this acquisition was made and why these parks are transferred from already owned by Malpani Group to the Imagicaa Group. So, firstly, through the acquisitions, the company aims to become the biggest player in the amusement industry. Secondly, the company will now be able to expand to further states more efficiently because now it's the market leader. Thirdly, the company is also open to further inorganic growth and taking on debt for this purpose becomes easier since all the parks are now under one entity and the cost of debt also reduces. Fourthly is the optimization of resources like we talked in the synergies first part. So, and now coming to the right, Imagica is also investing in capex in the existing parks. Like 30 crores was invested in Imagica Lonavala for a grand musical fountain, and also 21 new rides are being added to the wetandjoy Park and the Side Park for a capex of 25 crores. And at the bottom, you can see how the total numbers would look like after the acquisition. Moving on. Coming to the current financials and post-acquisition financials for the company. The company saw sales of rupees 240 crores in the year FY29 and a sales of 250 crores in the year FY23. Therefore, there has been a no real improvement in sales through these years. Coming to the profit part, the company saw a loss of rupees minus saw a loss of 350 crores in the year FY29 and a profit in the year FY23 of 350 crores. Uh, these 350 crores include a one-time reversal of depreciation, which was made on the equipments and also other incomes. So this is not really sustainable for the company. The real profit is very less than this number. And the same trend is seen in ROCE going because of the profit, the one-time profit which the company has made. Below that, in the table, we see what are the stats going to look like after the acquisition. The number of parks is going to become 7, including the Imagicaa, wetandjoy, and the site parks. The total footfall will go up to 27.8 lakhs. This is a huge number, and this is going to continuously increase because of the growth drivers which we are going to see. Revenue for Imagica in the current year was 257 crores, while for wetandjoy and themepark, which are owned by Malpani, were 148 crores. So the total revenue will go up to 408 crores. The EBITDA margin averaging out for the whole company will stand at around 43.9%, will round up to 44%. So in the bottom left, the we see the payment schedule of the 630 crores acquisition. So 30 crores is going to be paid this month, and 100 crores is going to be paid 2 months after, and 100 crores in the month of September. And after that, every 6 months, a payment of 100 crores is going to be made. So we can see that the company has spreaded the cost of acquisition of 630 crores till FY27. So there is no current burden for the company, and the company has also stated in the con call report that they will raise debt up to the levels of 2 to 2.5 times of the EBITDA, and the rest will be funded by internal accruals. So the current financials of the company, in the balance sheet, the company currently has a cash of around 30 crores, so it is efficiently liquid. Also, for the post-acquisition financial, EBITDA, as specified in the con call report, EBITDA is going to increase to levels of 50 to 55% in the future coming years. So the EBITDA percentage for Wonderla is currently at 52%, and we expect Imagicaa to also go at that level by FY26 or 27. And also, cash flow from operations will increase significantly and will help in the loan repayment of 630 crores. Now, coming to the growth drivers for the company, firstly, is the GDP per capita is going to increase. So from 2022 to 2025, the GDP per capita is expected to increase by 26.6%, which will increase the discretionary income for the consumers, which will directly lead to a revenue increase for the company. So this GDP per capita was from an individual perspective. Coming to the household perspective, so in the year 2018, 43% of the households came under the low income category, which is expected to reduce to 15% by the year 2030. This will automatically lead to an increase in the household income, which will lead to an increase in the revenue for the company. Now, coming to the demographics of India, so much of the population of India lies in the age group of 15 to 60. This is a huge advantage for the company since the main customer base lies in this age. So these are three factors where the growth is going to come from for the company. Now, coming to the chart on the bottom left, this is a chart where the management compares the growth of India to that of China. So in 2006, the per capita income of China was at 2100, while that of India in 2019 was 2100. And that in China, the number of domestic tourists in 2012 was 3000, which India is now at 3000 in the year 2023. So management compares the growth of China to India, stating that so after 2006, China saw a very explosive growth where the per capita income increased by 5% after
Five
the year
times, five
2006.
times, five times.
Sorry, 5 times. So the management expects a same growth for our country. Now coming to the bottom right, so currently the revenue distribution of Imagicaa is around 67% from the ticketing revenue and 19% from the F&B revenue. But compared to the developed nations, the revenue from ticketing and F&B is quite the same. It contributes as the same percentage to the total revenue of the company. But in India, this is not the state because many people buy the ticket, but they don't prefer to spend in the amusement park on food and other items. So this is also going to change with an increase in the factors like discretionary income and household incomes. So these are all the factors where the company can expect its growth to come from. Going ahead.
Yeah.
Yes.
So coming to the peer analysis, there are four majorly listed peers or major listed companies in the amusement park sector, which are Wonderla, Imagica, Nico Parks, and Edge of Fun World. So while the sales of Imagica is comparatively less than Wonderla Holidays, but we expect this number to grow substantially as compared as we saw in the previous slides, and we'll also see in the future projections when we present it. So other than that, if we see the PE ratio of the company, that is according to the industry PE, it's comparatively less, but the market price to sales is currently higher. So as I told, the sales number we are seeing is very positive, and they will generally increase. So this number also shows a positive note. And the PE ratio currently shows the fact that the company
Hello.
has a potential to grow. So these numbers actually show a very positive side. Coming to the Imagica's profit, even after low sales, Imagica has a better profit than Wonderla, but as you discussed earlier, this profit contains a depreciation reversal. So we need to look forward those numbers from that perspective. So moving on.
Okay, so now let us cover the risks which the company faces in its business. So companies in this sector have a high degree of operating leverage. A minor increase or decrease in sales revenue can cause a huge variation in the operating margins. Secondly is the seasonal business. So businesses like this have a lot of seasonality and highly depend on the good season for the revenue. Therefore, one bad quarter can lead to huge losses for the company. Thirdly is the macroeconomic conditions. This business also depends on the consumer sentiment and discretionary incomes of the consumers. Therefore, changes in macroeconomic conditions like the currently Iran-Israel war or the Russia-Ukraine or the US interference in the world politics, this can alter the consumer sentiment in India also, which can lead to more conservative spending by the consumers and thus lesser revenue for the company. Newer rights. So opposed to its biggest competitor, Wonderla, Imagica outsources its rights and thus faces a high investment on its rights. Therefore, an unsuccessful ride can alter the numbers very negatively. Since the per cost investment of rides is very high for Imagica as compared to Wonderla, so if a ride goes unsuccessful and is not liked by the consumers, the effect on its balance sheet is going to be huge. Thirdly is the incidence. Fourthly, this is a major goodwill factor for the company and the major goodwill factor for the company. Talking about this, there has been certain incidents in the past where people have been admitted to ICU because of incidents in the Nitro ride of Imagica, which is in Lonavala. So many such incidents can cause a goodwill loss for the company and uh, will cost to be very detrimental for the company because the consumers will not now visit Imagica also because of safety concerns. Also, cannibalization. So something not covered here is, which is also important risk. So four parks of this company are very much in the same area. The theme park of Imagicaa and wetandjoy, and the water park of Imagicaa and the water park of wetandjoy. So these four parks are pretty much in the same area, and the sales of one park can cannibalize the sales of other parks because a consumer won't want to visit two parks at once or in a year, I would say. So these are the risks from the perspective of the business. Now let us come to the risk from the perspective of investors. So business strategy changes is the biggest risk, I would say. So currently, company has said that the debt won't exceed 2 times the EBITDA levels, but a change in the strategy can lead to changes in the value of the business. Also, from the perspective of shareholders, a majority shareholder can, like Malpanigroup, can act in their own interest by taking on more debt and which can lead to the detriment of the minority shareholders. Projections revenue depends highly on the quality of the park. So since there are many parks acquired now with no previous running history, the projection of the parks is very difficult and thus can vary greatly with our projections which we have made. Coming to the price comparison, from the price comparison we see that the rates of Imagica are lower than that of Wonderla. This shows us that there may be a gap for Imagica to increase its price and thus its revenue. Also, since both the parks enjoy a monopoly in terms of the parks because they don't compete in any same area, the consumer base is completely different and the consumer has a limited number of options and thus the parks can increase their rates to increase their revenue further during good seasons or good economic conditions. Also, the price vary a lot due to various discounts and offers and thus are not directly comparable. Therefore, we compare the average revenue per user for Imagica and Wonderla, and the average revenue per user of for Imagica stood at 1543 rupees for the year FY23, while for Wonderla was at 1243 rupees. Moving ahead, uh, so this slide shows us the area of the parks and the rate at which they were acquired. There is nothing much to explain over here, and these are just the revenue figures. Sorry, the cost figures at which they were acquired and the area under management. We can analyze these parks further when the revenue figures for these specific parks are available. so that you can compare them with the cost spent and the area under the park. So for currently, there is no real analysis we can do on these things. Okay, so now we come to the forecasting part for the company. So revenue. So we are divided the forecast into 5 things. Firstly is the revenue for Imagicaa. So the revenue for this year was 257 crores. So since we have just now recovered from COVID and the company is going to realize many revenue synergies, the growth rate for the company is going to be higher than that of the industry. And we have considered a growth rate of 18% for the year FY25, 16.5% for the year FY26, and 15% going ahead for the 3 years ahead. Now coming to the wetandjoy parks which they have acquired. So in FY24, the revenue was 150 crores, but the wetandjoy parks didn't see a whole year of operations because they were opened later. So this number doesn't truly reflect their true potential. So we have increased the revenue figure by 30% for the FY25, 30% for the FY26, and 20 and 15% for the years ahead. When the so These are the numbers which the parks will realize once it starts functioning for the whole year. Thirdly, coming to the indoor park which they have acquired. So in the con call, the company has stated that for the first year, the company is going to realize a revenue of around 33.25 crores. And this, since it is the first park for the indoor people and also for the Ujjain people, which they're targeting, the revenue growth is going to be high. So for the year FY26, we have considered a growth rate of 25%, 22% for the year FY27, and 20% going ahead for the 2 years. And also extra parks as a percentage of capex. So okay, so in the year FY25, the gross block for the company was 1654 crores, which were assumed is going to be growing by 10%. The company is going to be investing 10% of its already gross block every year. So 1/4 of the new investment is going to be realized as revenue, which is the ratio for the indoor park. So this is the same ratio which we went ahead with. So these are the revenues which are going to realize 41.35 crores to 269.41 crores from the new acquisitions which they are going to make, because there is no data available for the new acquisitions that they are going to make. But the management has clearly specified that there are going to be many acquisitions that they are going to undertake. So we see the total revenue for the year FY25 as 563 crores, through the year FY29 as 1,350 crores. So the EBITDA margin currently stands at 44%, and we have assumed a growth rate in EBITDA margin of 2.5% yearly, because so for Wonderla, which is currently the industry leader, its EBITDA margin stands at 52%. So if we take a growth rate of 2.5% every year, Imagicaa comes at where Wonderla currently is in the year FY27 to FY28. So this is a conservative growth rate we have taken under consideration. Also, there are going to be many cost synergies which you talked about, which the company is going to be realizing. So these the EBITDA percentages are going to be more than this only, but this is a conservative estimate which we are taking. So now coming to the depreciation percentage. So the depreciation for the company varied greatly from year to year. So there was no real number we could take. So comparing to Wonderla, so Wonderla has a current gross block of 1,000 crores on its 1,050 crores on its book in the year FY23, out of which land stands at 550 crores in its book. So more than 50% of the gross block of the company is in terms of land. While for Imagicaa, the gross block is 1,654 crores, but the amount of land in this gross block is only around 150 to 160 crores, which is less than 10%. So what we did was that we from the gross block of Wonderla, we removed the land. So out of the 450 crores of gross block remaining, removing the land, there is a depreciation of 7% for the company, which was for Wonderla. So we took the same depreciation percentage for Imagicaa on the whole basis. So 1654, since land is only 155 crores out of 165 crores, we took the 7% depreciation rate to take a conservative estimate on the whole gross block number. So these are the depreciation numbers which we are going to realize through the FY25 to
Directly move forward with the PAT numbers. So we are
Okay.
seeing that we will see that 360 crores of PAT in FY 2029 with 27% margin.
So
Please go ahead.
this is just a scenario analysis which we have done. So since the depreciation numbers and the interest expense numbers were not readily available, so we had done a scenario analysis. So for example, for a 10% interest rate and a 5% depreciation rate, the profit for the company in the year FY25 will go up to 117 crores. While talking about the other case, like if the interest rate is 14%, while the depreciation rate is 7%, the profit for the company is going to be 87 crores for in the year FY25. So this is the scenario analysis which the company is going to realize from the year FY25 to FY29. We can have a look over here for 10 seconds.
Yeah, okay.
So these are the PE ratios which we get if we invest in the company. So if we invest in the company at the current market price, we get a 5-year forward PE of 10.49. If we wait for a 10% drop in the price and a 20% drop in the price, we get a PE of 9.44 and 8.39 respectively. After conducting technical analysis, and so we see a support at the level of 53 for the company, which is a 34% drop from the current price. And if we get a buy at that price, a 5-year forward P is going to be 6.92, which is going to be 7, which is going to round it off to 7. So at this point of time, the company is going to be in deep value, and we are going to buy this company at that point of time. So this is the technical analysis conducted on Imagicaa. If the company crosses the price of 90 rupees, the company, we can take a momentum buy for the company in the range of 90 to 130. And after the point of 130, there is going to be a euphoria zone for the company where the price can shoot up to 250. Uh, for investing purposes, from the price of 60 to 80, the company stands at undervalued zone. From the point of 40 to 60, the company stands at deep value zone, and at the price of 8 rupees to 40 rupees, the company is an ultra deep value zone, and this is the best buy which we can get. So this was our analysis on the company. Thank you everyone for listening to us and having us present over here.
So thank you, Raghav, and thank you. I'll just put that chart in front of me so that I can explain that to everyone. So this presentation is presented by Narsimunji Mumbai interns. So this is technical analysis because I've been working on this with these interns. So currently it is nearing rounding bottom, and what we have seen is just few months back there has been a big volume surge. Price rise has been not much, but the volumes have gone up high. Now, if let us say if anyone wants to take it in for with a margin of safety, because if you want a margin of safety, so that in any kind of a case, you don't have a permanent loss of capital, you need to look in deep value zone. So deep value zone is around 40 to 60. If it falls during that stage, it will be called as a deep value. But having said that, this is in now at that stage where it can give a breakout. So it can become a momentum bet above 90 rupees, above 84, 85 rupees. It can become a momentum bet. Once it comes on our alert system, it can be looked in as a momentum bet. But for a deep value bet, it is good as a 40 to 60. But here we can say that here, because when you are in a deep value, I personally feel that I can put large amount of capital because there is a high margin of safety. But if I am in a momentum zone, it can be played because this surge happens very quick whenever the stock enters into a momentum zone. And the fair value zone starts in between 90 to 30. And this is the zone which it has because it will be completing a rounding bottom breakout. So investors should watch on this. Whatever we are discussing, this is discussed from a purely from an educational purpose. Nothing of this should be considered as an investment advice. This is for purely educational purpose so that you can understand this idea where the deep value zone lies, where the undervalued zone lies. So even at 60 to 80, it can be a good buy. but at 40 to 60, it can be a great buy. So we are in a situation where the war times are going on. If the stock price crashes, it can be in that zone, or even if it doesn't crash, we can play it through a momentum bet. Having said that, when we were comparing Wonderla Holidays with Imagica, what we concluded was Wonderla Holidays is like a very conservative business. As I have said that I'm holding it in my daughter's account, that it's such a business which doesn't take debt on its balance sheet. But having said that, this is very slow because what it happens, and that is the reason why I call Wonderla as a 20-year bet, because it is very safe. They never take debt. Even the rides are constructed in house. There might be some disadvantage of that also. Imagica has a better advantage on that when it comes to rides because they have international experts. But having said that, you can compare Imagica with Adani. So it is high growth company compared to Wonderla. Wonderla will go on its own pace because its business model is different. But Himanshu has given me this comparison, which he said that Imagica को हम अदानी की तरह दे सकते हैं, जो debt लेके expand कर रहा है. I don't see this as a risk because we are in a stage where the per capita consumption is going to shoot up. And with when we are not going to see any kind of, let us say, one more COVID can hurt this company a lot. It will not hurt Wonderla. But we have to understand that because it is not about the risk, it is about the risk management. And having said that, we don't see that any issues might happen over the next 3 years regarding COVID and lockdown, such that if there are no issues such that if there are no war which is fought on Indian land near to cities, it won't affect the sentiment. So when there is high rise in per capita consumption, it is a premiumization play. And having said that, the promoter whenever it is changes, it brings a lot of energy to the company, and it has already brought that lot of energy. And I believe Wonderla Holidays is at an inflection point. The past has been completely different. The future will be completely different. Having said that, this is in fair value zone as of now. Undervalued to fair value zone. It is on that borderline. For a large amount of bet, I will wait for deep value. For a small bet, even at this stage, it is in undervalued to fair value stage. It is not overvalued. The momentum might soon start in one Imagica world. So this was about the Imagica world. I think I would like that the members should give their feedbacks about the presentation. I'll unmute you. Ayush, you can end this presentation first. You can put this presentation down. Hope this was insightful. Himanshu, what is your say?
So it was really good, and especially the way these guys present, it was amazing. And I'm really impressed. I already wrote some messages to show that the way Ayush and Raghav present, I really like it. And am I audible?
Yes, you are audible.
Yes.
Suyog, am I audible?
Yes, you are audible, Himanshu.
Hello. Okay. So it was really good, and especially the way they did research. I think they took on each and every point, whatever can be possible, and I'm really happy to.
Yes.
Okay. Thank you so much for the presentation. This is really nice. Um, Based on what I have been seeing for the past couple of minutes, this is like a very good opportunity. One question I have is about the sales growth assumption of 18%. Okay. um Similar to the depreciation percentage scenarios, do we have any scenario on the sales? Because in one of the commentary or the cautions, what I had read is this is sensitive to sales and also seasonal business, kind of similar to that nature. So do we have any sensitivity to sales, scenario to sales, how this will impact?
So currently we didn't make a sensitivity analysis on sales because there was not much data available for the acquisitions they're going to make in the future. So the whatever they specified in the Concall report and from the YouTube, we got to know 4 to 5 parks which they are acquiring, and according to that, they also gave the revenue numbers which they are going to realize. So, and also for since the industry growth rate is going to be 15%, and also there are going to be synergies for the company in terms of revenue and also in terms of cost. So we had taken a number a bit higher than the industry, and also if the sales don't go up by that number, the in terms of EBITDA, the EBITDA will increase because there are going to be cost synergies which we didn't take into account in terms of the EBITDA margin. So overall, is what I'd like to say is that we have taken a very conservative estimate for the sales number of the company.
Okay.
If that answers the question.
Yeah. So this is kind of, I feel, more sensitive because there's a lot of capex here. Okay. So, and if we see the previous management, they have kind of failed or lost the situation because of the high debt, repaying the high debt and the interest thereon, and committing large amount of capex. And if we kind of don't meet that sales growth, then I think it will be a risky thing. I think this is the only thing I see, but no one can predict how the sales are going to be. Yeah.
So
But
Vijay,
yeah.
Vijay, what you are saying is right, but it when in understand this point, we have came out of 10 years of GDP per capita of stagnation. We
Okay.
as a country at a GDP per capita is at an inflection point. So
Okay.
especially when you are leveraged, it adds to your advantage because we have to look it from a holistic point of view.
Hmm.
Because 10 years was very bad for steel companies. It was very bad for these all companies which had debt. For the
Okay.
next 3 to 5 years,
Hmm.
understand this where we are into. We are at
Okay.
an inflection point from a earning blast
Okay.
for the citizens.
Okay.
At
Okay.
GDP per capita, once it crosses 2200 USD, it
Okay.
shoots up very high. And that is
Okay.
the point which we are trying to make here is we are at that same stage where we were in China in 2006.
Okay.
Prior to that, if when we were in 2014, sorry, 2011 or 12, we were much before the industry growth. So at that point of time, they had done the capex much before the need. So that
Okay.
was the problem. I don't think that at this stage is a problem.
Hmm.
That is what I feel.
Okay. Okay.
Because we
Got
have
it.
to look it from a holistic angle. What has happened? That's why we say that, right? Because the whole world will be thinking about this, about the past. They will be
Hmm.
ignoring this.
Yeah.
But if you are able to see something which others are not seeing, that is where the opportunity lies.
Exactly. I agree. Yeah.
Yes,
Makes
yes.
sense. Thanks. Yeah.
Rajat Oksia.
हाँ गुड इवनिंग सर बहुत अच्छा प्रेजेंटेशन था। मेरा एक इसमें डाउट है कि उसमें रिक्स में भी इन्होंने मेंशन आपने मेंशन किया था कि वेट एंड जॉय जो क्योंकि मैं भी मुंबई का रहने वाला हूँ तो वेट एंड जॉय और इमेजिका बहुत पास पास है तो क्या रीजन हो सकता है कि मालपानी ग्रुप ने इमेजिका को एक्वायर किया क्योंकि वो पहले ही वो रीजन में वेट एंड जॉय उनके पास था।
तो जैसे मैंने प्रेजेंटेशन में बोला था, इट इज जस्ट अ ट्रांसफर ऑफ ओनरशिप फ्रॉम मालपानी टू इमेजिका, और अभी ये एक्विजिशन की वजह से इमेजिका सबसे बड़ा प्लेयर बन गया है अभी इंडस्ट्री का। सो इससे उनको पावर आ जाती है इंडस्ट्री में। और सेकेंडली जो मैंने पॉइंट बोला था कैनिबलाइजेशन का, तो हाँ वो एक पॉइंट हो सकता है क्योंकि 4 पार्क्स बहुत ही पास पास है, बट दे कैन काउंटर दिस कैनिबलाइजेशन बाय लाइक सुपर पासेस की।
Different
अगर
branding,
किसी को
different branding, yeah.
डिफरेंट, हाँ, क्या सुपर पासेस इशू करे या डिफरेंट ब्रांडिंग करे। सो फॉर एग्जांपल अगर किसी को इमेजिका विजिट करना है, सो दे इश्यू अ सुपर पास दैट विद इन 6 months इफ यू आल्सो विजिट दिस पार्क, तो इतना ऑफ है या इतना ऑफ है। तो और ऑल्सो 4 पार्क्स है, लेकिन 2 of them are थीम पार्क्स एंड 2 of them are वाटर पार्क्स, सो दे आर डिफरेंट ऑन सम लेवल्स।
Arjun, I have unmuted you.
Yeah, thanks, sir. So my question is like on the basically on the inflection point, sir. So that is one of the factor we are considering is the per capita.
Yeah, this
If the
bet is cleanly in the whole point of presentation. The most important point, like for example, Wonderla Holidays, why I was bullish on Wonderla Holidays during COVID time is because of cash on balance sheet. It would have survived 3 years of COVID. But here, the reason for betting is the inflection point. An inflection point is GDP per capita. So there also GDP per capita was there, but there the way to play that bet was different. The reason to play that bet was different. It was see, every bet is either a 1 to 3 year story, 3 to 5 year story, 10 year story, or a 20 year story. Wonderla, I consider that as a 20 year story. Imagica, because of the business model in itself is risky, it cannot be a 20 year story. You have to measure it on every 2 years basis, 3 years basis, because as he said, Ayush, if they are moving to away from the objective what they have set, they have told about 2.5 times EBITDA. If they start going up, go very aggressive at 3.5 times EBITDA, you have to be cautious and get out of the trade, because you will still get much more rally in that. And you have to be, it is not about the risk, it is about the how do you manage that risk. At this moment, it is at a good risk reward from a momentum investing point of view. From a value investing point of view, at a 34% drop from here, it becomes an attractive buy.
Sure, sir. So, and also we are considering the promoters change as well in the considerations.
Yeah.
Okay,
So
okay.
that gives the energy to that
Energy.
inflection point.
Sure, sure. Yeah.
Because what we have seen, just see, many times what happens is just because of the past promoter, company doesn't get valuation. It happened with Cupid Limited also. It happened with, and see what happened with CG Power after the acquisition. So many a times promoter change brings in lot of energy, and that is the inflection point. That is also inflection point. So both the things, per capita consumption, and there, I believe Malpani is at this stage are at the right place at the right time.
Sure, sure. Thanks, sir. Thank you so much. And guys, like I am Arjun. Like I have 50, close to 15 years of IT experience. So you guys are doing really great. And yes, as everyone is telling, you are fortunate. And yeah, keep the nerves get going. And I think you will be like very well placed in the market. Yeah.
Great,
Thanks, sir.
great. Thank you, Arjun. Anyone who wants to speak?
Yeah, hi, this is Sagar here. Yeah, this is first of all awesome presentation. It was so detailed and thorough. I'm just thinking loud here. So when it comes to the breakup, see, I just want to know when we did a research, is there a way to find out how many are the repeat customer, or like, for example, every year you have say 10 lakh customer, and then this year it is a 12 lakh, or it is the revenue increases just because of the price hike? That could be one reason, or net new additional customers. So do we have that breakup? Um, that is one. And then the second one is seasonality. Like in case of winter, probably it will be a slowdown. So is there a way they are working on some model where they can reduce the seasonality by various means, so that it becomes consistently growing all the time, all weather kind of business?
So I'll take the seasonality point that you mentioned. So when we look at Imagica, we only don't look at the water park itself. We also look at the theme park. And as Ayush mentioned in one of the growth drivers, which was F&B revenue. When we look at a theme park, we look of customers going around the year on a theme park. And when you actually increase the time that a consumer spends in a for example, a theme park, you actually gain more F&B revenue, because then they'll spend on souvenirs and then buy food. So one of the things that Imagica has done is install a water fountain, where they could have like water shows and like music playing along, where people will actually spend more time. So strategies like these, they're also doing additional capex on other parks as well. For example, they're doing 20 crores of capex and wetandjoy also to actually increase the time a person will spend in these parks. And people, you can see coming to these parks on an yearly basis. Moreover, while the water park I can speak of the two water parks that are present, which are Imagicaa and wetandjoy, are present in the areas of Mumbai, which doesn't see a lot of cold weather during the winters as well. So we can see that the sales do fall in these times, but not at a substantial level.
Also extending Raghav's point, so main hedge which there could be is that companies not only expanding into amusement parks, there are also devotional parks which the company is coming up with. So that is going to be a really good hedge. And from the management's report, we uh, we saw that the company is they are going to build amusement parks, but also from the point of devotional parks, they have one in Shirdi, and they are also going to build two or three more in Varanasi and other holy areas.
Buddha
So
as well.
that is also a really good hedge against the cyclicity, because people don't really come there for amusement, I would say, and it's sort of a holy place. So that also gives the company sort of diversification and the hedge you're talking about. And about the first point which you're talking about, the number of repeat customers, we from the report we didn't get any such data for the number of repeat customers the company is getting, because uh, the last con call which the company had was in 2018, and after that point of time the company had a con call in November 2023. So there was a huge gap, and because of that there is not much data available. And also
In
from
the
the
in the
annual report,
upcoming con call, you can ask that question, Ayush. Keep a track on that. Attend that meet, and you can ask a question to the management. So Mr. Atul Gokhale is in the same industry. He's in wealth management industry, and he's with us. He is in the community. Yes, Atul, you can go ahead.
Yeah, good evening all, and great presentation, Ayush and Raghav. Really well, well prepared, very well prepared, in depth. So my question, which we have not looked into, is the land cost, because this something means if you have taken any view on that, I just wanted to know, because sometimes what happens is that terminal valuation of these businesses also needs to look into at one point of time. If the things are not going well or anything, what kind of terminal valuations we can get out of this? So that's one question which is lingering on my mind. If you can have some details, please throw.
yeah, so that is something we tried to find out the land cost of the acquisitions they made, but there is no really data available regarding the same. And also for the projects which they are going to take on in the future, the management has stated that they don't aim to also acquire the land under the park. So, like the indoor park, they only acquired the rights about the land and not the land. So they aim to continue the same strategy in the future. So there is not going to be a cost of land for the company, I would say.
Yeah, it has
And
been
for the
happening
previous
with
parks,
it has been happening with Bhubaneswar plant of Wonderla. It has been happening with Hyderabad plant, sorry, park, and same is happening with indoor. So many much more governments are working on that to provide these land on lease basis.
uh, also one of the advantages I forgot to state in the presentation was that these company also receive many rebates from the government and on the fixed investments. So many governments want to have amusement parks in the state. So when the company deals with the government, they also receive around 25 to 30% rebate on their fixed capital investment. So that is also a huge advantage for the company, and the company is also going to receive it on the indoor plant as well.
As well
Can
as
you just check when the ad labs were there? There was no rebate on, and has this scenario changed recently? Because ad labs faced a big issue. So what is that ad labs did wrong compared to what they cannot do, and they will not repeat the same mistake. We should have a watch on that. Do study about it, and later on you can tell me about it.
Hello. Yeah,
Yes.
I'm sorry. Yeah, yes. So actually, I joined a little bit late, but I was following the technical presentation when they gave. So it was a good coverage. So very good start from the team which were presenting this. I actually was studying Wonderla quite some time ago in I mean, if I remember in 2017 18, it was getting a lot of coverage during those days. But after that, during COVID, it also crashed pretty badly. And then it is a cyclical industry. And as you already mentioned that the per capita income and all that matters a lot. After the COVID, the cycles have changed a lot for this. So all the travel business and all. So, and it is still continuing. And even we see recently, even Vijay Kedia has entered again in Country Club. So all this hotel, resort, and all these businesses are still booming. The opportunity is still there. Uh, I agree that that is still there. Yeah.
Vijay Kedia has
So
entered into Country Club, you said?
yeah, that not Mahindra Resort.
Oh, Mahindra Holidays.
So
I saw.
yeah, Mahindra Holidays. Yeah,
Uh,
Mahindra Holidays. So he recently entered that one. So he had some stake, but he had reduced, and now since the stock had corrected, he has entered again. So yeah, that is where everybody is still. I thought it is a 1 or 2 year story, but the story is still going on. So people, I see all the IT folks, right? They are taking big vacations. So
yes, yes.
whoever are there, they are still they are traveling different countries. Before COVID, right? People were just restricting themselves, but now other countries have also given a lot of flex. I mean, they are giving without visa, you can travel, right? Those things and all to encourage their tourism. So that is making people to travel a lot. So yeah, the thesis looks pretty solid. Yeah, I agree with your points. Yeah, and on the interns, very good job. So we are all in very good direction from Suyog. So Suyog has both the technical, the first technical and then the fundamental view. So you guys are can benefit a lot by attending all those sessions, whatever he is planning. So I basically from IT industry, so I've just started doing a full time in the investments, but I have around 18 years in IT industry. Earlier, I had worked on that. So, but I have gained a lot from this community. This community, especially the commodity stocks and all the in-depth analysis that Suyog has done, that has given a lot of conviction for me to take bigger bets in the commodity stocks and all. So, whatever, wherever the Suyog has good edge, right? He gives us full view of I mean, what we say second level thinking. So that you don't get. So if you just read a screener or you follow some other people, right, you will get a different angle. So, but here he is also giving you a second level thinking. So that is what leads to demand or what leads to supply, all those things you will get to know. So when you are having conversation, I think you guys would have benefited a lot already. So many people are there from almost a month, right? So
Yeah,
all these
it's been
interns.
one. Some are there from past 2 months. Some are there from
Yeah,
past 1 month. Something like that.
yeah. That's all I had, guys. Thank you very much. Yeah. Thanks, Suyog.
Yes. Yeah. Thank you, Purushottam, for your views. So if there are no any questions, let us end this meet. It's been long time now. So Chandrasekhar is saying my personal experience with Imagicaa theme park is like it is an international standard park. It meets all the customers' imaginations if they visit Imagicaa. Yes.